people forget often that their businesses are their biggest asset and it's got the most capability of really creating wealth.
Can you give us a couple of examples?
If you can turn your multiple from 4 to 6 and you grow your profit from $1 million to $2 million, it has life-changing implications to the family.
From a business owner, how does an accountant help grow the value of their business?
We see it as 4 different areas of accounting. Accountant do my tax, advisor help me make decisions. One of them's more widely understood, which is bookkeeper. And then the last one, which I don't think anyone really thinks about, is financial controller.
On the one side, you're figuring out how to help a business improve their pricing so they can get more profit to the bottom line. On the other side, figure out how to optimize the tax position.
And then add in the third mix of it, which is I need to borrow money to buy a property.
Should I be wanting to manage to a tax profit, or should I be wanting to manage to my optimum profit?
We're talking about tax like it's completely controllable. It's not. There's $1 million profit. There's 250 grand of tax. To get rid of that 250 grand, you have to spend $1 million. We're spending $1 to save 25 cents. You largely should be managing to your goals.
I'm not used to this accounting stuff. I'm just a simple business owner. I make money. My business is highly profitable.
You can't decide you're going to own a business and not learn how the numbers work, which is P&Ls, balance sheets, and debits and credits.
Do I need to actually understand each of those?
Should you? Of course. Is the most important one.
If we drill down, where do the problems arise?
So the number one thing I'll talk about all the time is gross profit margin. Most people can't tell you, or they'll give me a number and it's nowhere near. How are you making a single pricing decision if you don't know the margin you're making?
What are a couple of things that you look for from accounting services?
You're looking for someone that's...
Today is all about understanding the role of an accountant in a business's journey. And thinking from a business owner, how does an accountant help grow the value of their business?
Yeah,
right?
That's awesome. Love that.
We've got Danny Chiha with us. He's senior partner, Kelly+Partners, an accounting and business advisory firm in the northern beaches of Sydney. Danny, welcome. It's great to have you on board.
Mate, thank
great
you for
to have
having
you
me.
as a guest.
Grateful to be here.
So firstly, let's unpack. When you're in accounting and you're looking at small to mid-sized businesses, which is largely your client base across, I think, a number of industries, what roles do you play? Give us a feel.
It's good. I wish you told me we're talking about this topic. I would have prepared. It's actually funny because we obviously deal with business owners every day. Everyone has an accountant, but everyone thinks all accountants are equal and the same thing.
They do.
Because they just, in their own brains, it's like accountant's an accountant. We see it as 4 kind of different roles. So 4 different areas of accounting.
Yeah.
Most people go to their accountant for tax. And that's the predominant reason why they ever sign up to an accountant, talk to accountants. Like,
save me some money.
Yeah, the government's telling me I need to lodge something. I don't know how to do it. Someone do it for me because there's a fear of the ATO government, make sure it's done right.
Yeah.
And yes, I don't want to pay any tax. Help me find the loophole.
Yeah.
So that's the number one reason that most people start with their accountant.
Yeah.
And I think because of the position accountants in, i.e. they're always answering questions for the business owner around tax, this relationship creates where business owner thinks that the accountant knows everything about business. Yeah. And so then they start asking questions to the accountant about pricing or sales or product to market fit or anything to do with their business. They'll ring the accountant and ask the question. And so accountants, I think, inevitably landed in this role of being business advisors more than just tax accountants.
Yeah.
But I don't think for the most part, most accountants are trained or have done the work to be business advisors. But they accidentally land in that spot. Yeah. So then I think that advisory kind of CFO advisory piece is the second place.
Yes.
We like to play, and we see accountants playing, some qualified, some not qualified. But
so advisory, but focus when you say CFO more on the financial side, right?
Well, every decision in the business has a financial impact, helping turn decisions into dollars.
Yeah.
So if you tell me like, hey, let's talk about pricing, I'll sit here and talk about brand and pricing with you all day.
Yeah.
Because that does have a financial impact. But to talk about brand and pricing, I've had to read 1,000 books and watch 1,000 podcasts and do 1,000 things to learn about it. It's not just made up. But I think the relationship that most people have is like, oh, I'll ring the accountant. Hey, what do you think about price? Yeah, sounds good. And, oh, my accountant said it's okay.
On the one side, you're figuring out how to help a business improve their pricing so they can get more profit to the bottom line. On the other side, you're trying to figure out how to optimize the tax position.
Right. And then add in the third mix of it, which is I need to borrow money to buy a property.
Yeah, right.
So that's an inevitable triangle that we're kind of always sitting in, juggling with people. Like, what are we buying this year? How do you manage it? Like, what are the levers we have to play with? But yeah, like more often than not, people will come and like, I don't want to pay any tax. And then a week later, hey, I need to submit this loan application. Why aren't I making any money? It's like,
yeah, I need to look better.
So they're the first kind of two roles the accountant plays. It'd be like that, accountant do my tax, advisor help me make decisions and guide me on decision-making processes.
Yeah.
Probably the two other ones, which, one of them is probably more widely understood, which is bookkeeper, like, help me with transactions within my business and make sure the bookkeeping's done.
Yeah.
And then the last one, I don't think anyone really thinks about, but I think super important, is like financial controller. So help set up the processes within my business that allow the money to flow into the right places in my reporting or something like that. So I actually get a full reconciliation of my balance sheet.
So that's interesting. Is that about sort of a business knowing where they're at any time, based on their trading performance?
Well, yeah, exactly. So you can do bookkeeping. Like everyone's got to do some level of reconciling and bookkeeping to do their, BASs, taxes, etc.
Yeah.
But not all bookkeeping's equal. So having it done in a way where you can run a report and actually see what the performance looks like at either weekly, monthly, whatever time frame you're looking, requires the setting up of a system that works in fast.
That fourth one, is that more kind of a management accounting
thinking? Yeah.
Thinking.
Yeah, definitely.
I don't know whether our audience will notice the difference, but it's down in the business, isn't it? It's thinking about the levers day to day.
All the outside of the tax accountant one, which is probably sitting outside the business and filling out forms.
Yeah.
The other three are very much in the business day to day. Bookkeeper, data entry, management accounting / financial controller, making sure it's done and presented in a way that makes sense. CFO making decisions and strategically assisting the business in how the decisions impact bottom line.
So putting together good, strong intelligence for the business owner to help them make a decision.
Make a decision, yeah. Most people go to the accountant saying, are you an accountant? Like, yeah, and they treat all accountants as the tax accountant equal, but there's like... different accountants, I guess.
Look, I have a beef with accountants.
Yeah.
Like as a valuer, right? We and an advisor, we come across a bunch of clients and a bunch of business owners, and it's really interesting, because I talk to them and they talk to me about their accountant. They hold them so close, right? Mostly as a trusted advisor in their business.
Yep.
So that's on the one side. On the other side, they often, excuse the language, bitch and moan about their accountant, right?
Lack of response
in some senses, but also they have this grandiose expectation of what they should be getting from their accountant.
Mate, like it's my number one conversation when someone onboards with us.
Right.
I don't get proactive advice from my accountant. I'm like, oh, okay, what do you engage and pay the accountant to do?
Yeah.
My year-end tax return. I'm like, I don't understand how they're going to give you proactive advice if once a year, 6 months after the year's finished, they're looking at your numbers. Like that's not what you're engaging with. And truthfully, they're probably not trained to do that either.
Yeah.
So like I think there's that's the point. There's a big misconception between what that tax accountant relationship is.
Yeah.
In what they're expected to do and what they're doing.
So what should a business owner do to align that kind of expectation with reality, do you think? Like, what's your advice to a business owner? I
think they have to, largely it's have the conversation. Like, so, really look at your accountant and be like, is this the kind of person that should be giving me business advice? Like most trades and technicians, most accountants land in their role of partner, senior person from time in job, being really good at being an accountant and doing tax.
Yeah.
Most of the time they've never had to run a business and take and put their business owner hat on to the same degree that some of these business owners have to. So is the accountant the kind of accountant that can have that discussion with you?
Yeah.
If it is, awesome. Have the conversation really clearly on, all right, you're doing my taxes. What else can you do? This is what I expect. Can we deliver this? What does it look like?
So be more transparent about having 100%. That up front. Yeah. Because it used to be if you hired a lawyer or an accountant, you didn't even ask for a quote. They were wise people.
Yeah.
And so as a business owner, you just say, well,
do X.
Yeah. I've got them. You know what I mean? But you're saying it should be more of a dynamic relationship and more transparent on both ways.
I think over the last, we'll call it 15 years or whatever it is, since like cloud accounting, zero data got a lot better. I think if you rewind back to like, pre-zero, pre-cloud,
yes,
to work with an accountant, you had to someone had to be doing the bookkeeping inside the business, then send the MYOB file to the accountant who's looking at the data once a quarter and just preparing your BAS and submitting it.
Yes.
There's no live relationship on live data. If you go back even pre-2000 when there was no GST, you're only sending an accountant a thing once a year to do your tax return.
Yeah.
There's that relationship it's only 20 years ago, that relationship didn't exist where we're having a common conversation all the time about your business.
Yeah.
So what was the accountant's role is completely different to what it can be now.
I see it as a source of frustration with business owners. And I'm sure with accountants
on the other side,
degree,
100%.
Right? In valuing businesses and providing advice on various things, we deal with a lot of accountants. And I do see the good side.
Yeah.
I mean, you look at an accountant's fees, and I look at some situations where they've provided advice as decision support in structuring a business
$1 million deal.
Amazing. The fees bear no significance in terms of the value delivered.
Agree.
Right? But it's being able to harness that expertise, I guess, is what you're saying, and it's sort of a two-way street. You can have an accountant with the expertise, but you've got to also have a business owner that's prepared to ask the questions and
invest in the relationship. I think that we laugh often where we'll get a random phone call about a deal or whatever, and we're like, no, don't do it that way, do it this way. And it's a 15-second phone call, but it saves literally millions of dollars.
Incredible.
And you can't even get someone to understand on the other side the amount of learning that's happening in the background to be able to identify that quickly and solve that problem. Yeah. And that's saving the client or business owner so much money.
Without divulging confidentialities, can you give us maybe a couple of examples?
Property transactions are the easiest and most obvious.
Okay.
Think through, someone rang me, they actually worked at a Big Four accounting firm, and they were in an operational department, not an accountant, but they're like, their dad's property is about to sell, we're going to develop it, we're going to do X, Y, and Z, and if we sell it to market, taxes are going to look like A, B, C, and D. And I'm like, mate, that's a primary place that you've had for 30 years. You're about to lose 30 years of market value uplifts that would otherwise be tax-free.
Yes.
You're better off A, selling it before you knock down a thing, which will save, I think I ended up saving him $3 or $4 million.
Wow.
Or B, sell it to another entity, trust company, pay the stamp duty before you do the development and get the uplifting cost base. So easy,
very
win.
Easy. Yeah.
And easy on our side to identify the problem. Obviously, a lot of work goes in after that to make sure it all works and do it correctly. But it could easily have gone the other way. I was like, yeah, sounds good. And they get to the end of the deal. They make money, but they pay so much in tax that it eats up the profit of the deal.
Yeah.
But that's the tax side. So tax side of things is there are big opportunities when big transactions happen. Yeah. Getting things structured right early. We're doing one last night. I was on the call with one of my team at midnight last night, working through a client that's looking to take money out of their business to buy property. And I'm like, the way that they got set up by their prior accountants, you can't, if they're pulling this money out of the business to buy property, they're going to be paying 50% tax to do it because they don't have any trusts or bucket companies or anything in place, which you'll understand.
Yes.
And I'm like, it's that you're losing 50% of your capital that you could otherwise invest if we fix the structure first.
Yes.
But the tax consequence of fixing the structure means there's going to be a CGT event to get it right.
Yeah.
And then it's like, all right, well, let's run the maths on the day one cost versus the lifetime cost of getting it right. And why it's tricky is this particular one last night, they've been making no money forever. So as a valuer, this business has been in play, turning over a couple mil, making $0 profit for the last 5 years.
Yeah.
In the current year, that's gone from no money to $15 million turnover and $5 million profit.
Wow.
And so the value, the accountant's probably intention was always we'll restructure in the future, but it hockey stick too fast that no one got a chance to have the convo.
In listening to all of that, I can't help think of one word. Planning.
Oh, mate.
If you could wind yourself back as that client, for instance, with an accountant would have done things very differently, right? And you'll never get things
perfect
right on, because the world is, you can plan as much as you like, but it's, one of the benefits of the world is it's highly unpredictable in some respects. But you spoke before about the sort of 2000 GST environment where, it was in the rear vision mirror that you got the stuff to the accountant and they did the tax and that was it.
Yeah.
So are we getting better as business owners at planning with our accountants, or what are the keys to making that work?
It's interesting. I'll talk about planning separately in a second. Business owners first. Again, car on the way here, I was talking to someone who's got a business, and they're like, should we change our franchise? Should we be in a different industry? Like, talking through that idea. Yes. I'm like, listen, we deal with everyone in every industry, in every franchise group, in doing all different things. Like, the common denominator is always the business owner, not anything else.
Yeah.
So when you ask, are business owners getting better? Business owners that want to be business owners and do the work to learn to be how to run a business are getting better and getting more information and utilizing it better. You can put them in any scenario, in any industry, and they make it work to a large degree.
Yep.
Business owners that put their head in the sand and just kind of think everything will be okay end up paying a very big, lazy tax or unprepared tax.
Yeah, okay.
And they don't know. Because they just think it's normal. They don't actually know the cost of what they're doing until someone points it out.
Yeah.
So are we getting better? The tools are there to allow people to get better completely. It just really depends on the person's level of engagement into that.
Yeah.
For the guys that we work best with, right now, for most of our business owner clients, we do tax planning as an example, where pre-June 30, it's like, these are the scenarios, this is what it looks like. Let's make a 1 or 2 year plan on how we're going to manage taxes versus lending versus what we want to achieve. Obviously, we're playing within the realm of what's possible, but we're at least looking forward and thinking.
Yeah.
Does it work out perfect all the time, or do things change? Of course. But there's a baseline of expectation that you're playing off. It's not just random hope and see where it lands.
So should a business owner, 1 year, they get to the end of March and the profit for the year ends looking like $2 million. The next year, they get to the end of March and the profit's looking like $500,000. In both scenarios, should they be hitting up their accountant and talking about, considering options around tax planning?
In all scenarios, yeah. So whether it's $2,500,000 or $500,000 loss, you're either talking about tax planning or you're talking about, hey, how do I let's talk about how I strategize next year.
Yeah.
Assuming they're the type of accountant that can have that conversation.
Yeah.
But yeah, there's no scenario where you shouldn't be planning. We it's funny, I don't know if you know much about the building industry, but
a little bit. We have a few clients in that.
There you go.
Space. Yeah.
And their frustration around homeowners warranty insurance.
Oh yeah.
So every year they have to do a submission. That submission dictates how many jobs they can do the next year. We do some workshops with HIA and some other builders, and homeowners warranty is the number one topic that everyone always wants to talk about when we go there. And I'm like, the last session I did, I was like, so what do you guys do around planning? We all know that it's based on your June 30 numbers.
Of course.
So I'm like, so what do you guys do about planning around the year end to make sure the numbers are as strong as possible? What do you mean? I'm like, what do you mean? This is the biggest thing that stops your business that you're complaining about. And no one sits down and goes, hey, how do I maximize this?
Isn't that interesting? And you hit on something there that I want to expand, because you said, make sure the numbers are as strong as possible. When we value a business, we peek into the accounts and the financial performance of the business, and we're really looking at the level of sustainable earnings. And often we're thrown a set of tax accounts. And the objective, rightly so, has been, let's minimise our tax, right? So you've got tax accounts which, the profit often looks fairly meagre, or sometimes does.
Yep.
And then you've got sustainable earnings for a different reason. Your HIA example is a good example.
Yep.
But from a valuation perspective, it's critical that we understand what are the real underlying earnings. Now, if you put yourself in the shoes of a business owner, should I, as a business owner, be just wanting to manage to a tax profit, or should I be, as a business owner, wanting to manage to my optimum profit?
You largely should be managing to your goals. So it's more like probably a bit more nuanced in that.
Yeah.
Someone once said this to me early on in my career, and I was like, it actually makes a lot of sense. But like, don't let the tail wag the dog with taxes.
Okay.
So like we often go to tax first, i.e. let's make the tax as low as possible. Then we try and implement strategies and things that we want to achieve in our life on the back of that.
Yes.
Not the other way around, which I think is how it should be. It's like, what are my goals? What do I need to do to achieve them? And then like, let's think about tax that we need. Like, what's the tax level that we can manage to play that? We're talking about tax like it's completely controllable. It's not.
Yeah.
There's realms that you have to play with, but in terms of what you can control, like to the degree that it doesn't get in the way of achieving your goals and strategies. I often say like, exactly what you're saying before, like people have $1 million profit. They're like, oh, should I go spend money to save some tax? I'm like we, there's $1 million profit. There's 250 grand of tax. To get rid of that 250 grand, you have to spend $1 million. Like if you've got $1 million of things to spend on that you actually need, then awesome. But you're really losing 750 to save.
Make sure your net cash flow of the business moving forward is pretty solid.
It's like we're spending $1 to save 25 cents. If it's something we need to buy and like, I was going to buy a car anyway. Should I buy it now versus later? Or I'm going to buy laptops for the team. Should I buy them now? Like, cool. Yeah. Or can I prepay some stuff that I was going to pay anyway? But if I'm going out and just like blowing money for the sake of not paying taxes, it kind of gets a bit silly.
Yeah.
And we do see it often where people are like, I'm just going to go spend. I'm like, well,
I come across it quite a bit, right? And some of the businesses are quite large businesses, but some of them are also small businesses, right? So they've gone from that sole trader and they're kind of in a twilight zone of sole trading, potentially looking at a company. And for whatever reason, in certain industries, believe it or not, they've still got a few folding ones that don't make the accounts. Yeah. And, and they sort of hold on to those because, they think, well, the minute they go to the accounts, I got a tax problem. Yeah. Right? So there's that, I should just be managing it to a tax perspective and not thinking. Yeah. But as you say, no, that's a relevant issue, but the more relevant issue is what are your goals?
What are we trying to achieve?
Short term, long term, And
I'm not at all advocating that we should pay more tax than we legally need to.
No, I get it.
Or that over the top of what our goals are doing, but it should be the secondary part of the convo, not the first part.
Yeah, I love that. I love that, and I think, I think that's a really important insight. And the other one in unpacking the 4 famous things that accountants do. The tax and compliance, the business advisory, the bookkeeping, and the financial officer, information management intelligence. Yeah. What you've really said is, hey, if you want value out of your accountant, spot their strengths and weaknesses because 100. They're part of your team, and then hit them up and have dynamic discussions that are transparent.
And like you can have more than one accountant.
Yeah.
In that the tax accountant can do the taxes and you can still have a CFO or a financial controller or a team that actually know what they're doing on the other side that are completely... I'm talking internally with my team now about segregating our teams because I'm spending so much time training people on, like, as the tax law is like huge, this big, and there's so much things you have to learn. I'm like, and on the other side, I've got these niche industries that we look after. And I'd rather my team be learning one or the other and doing it as experts, not being across everything.
Yeah, I love that.
So I'm kind of like, be an expert in this. And when we get to the year end, when we do the tax planning and the tax return, we'll pull the tax team in.
Yeah.
But otherwise, let's just be experts at that industry and knowing that business model and pricing or inventory management or something instead of everyone being experts at everything.
Now, I really enjoyed listening to that because I think that specialisation... It's the same with a business owner, right? And you're a business owner.
100%.
Like, it's focus.
It's focus.
Right? And if you focus, you're going to do better.
Yeah.
And it's a proven fact. And I guess a cynic would say, listening to this, well, Danny's just is self-serving. He just had a perfect advertorial for his business. Different services, you know, get 2 accountants. Why do you need one? Right?
It's not bad, I promise.
No, but I love it, right? And what I want to do is turn it on its head a bit, because you think about business owners. Do they potentially sometimes look at the cost of an accountant wrongly?
I think so. And like, mate, I'll be telling them to save money where they can as well. So I understand why they do, but I don't think, I think they don't appreciate what they need and what they're getting often.
Yeah.
And, you know, I completely get the idea that the cost of doing your BAS, the actual cost of doing the BAS and the cost of doing the tax return sometimes feels like it's expensive.
Yeah.
But, and potentially it is, like, if that's all you're getting, you know, it's a commodity almost, like the cost of petrol.
Yeah.
But the advice that's happening around it, and the strategy and advice that can happen around, if you're paying for and getting those things, they're invaluable if you get it from the right person.
Yeah, look, I mean, I took some clients who have a tax accountant that they've used for many years, and they needed some more strategic advice on structuring, right? Because their business is growing rapidly. They had a trust involved, but they've sort of in the middle have gone from a sole trader to a company structure to run a couple of different businesses. And this advice was going to cost 10 grand. That accountant, through one sitting, but a detailed review of their affairs, has set up their sort of structures to suit them for the next 30 years probably.
Yep.
And in just that first sittings probably saved them this year alone 150 grand for 10 grand investment. You know, so you sort of look at that and think, wow, you know, you could easily say, 10 grand, that's a lot of money. I'm not used to paying that for this sort of external advice. Yeah. But on the other side of it, you know, careful not to cut off your nose to spite your face.
Face. Yeah, they are big, we deal with this every day. Like, they are big numbers. We get the tax lawyers involved. Like, things get expensive, but you're spot on. There's so much value on the other side of that. It's the old selling time issue that I think people have with. Of course. But you can just do that really fast. Like, why does it cost them 10 grand to get the lawyer involved? It's like, they can, but they've studied for so long. They need to understand your situation. If they get it wrong, they get sued. So they have to do it properly and perfect. So, it's not too dissimilar to lawyers anywhere. No. And I think it's really that, you know, would you rather the right result fast in a way that saves you money, or do you want me to just draw this out so you feel like you're getting value for money because I took longer to get to the answer? Yeah, that's right. But I think moreover, and hopefully it's slowly getting there, one's got to think of their accountant just as they should think of their lawyer, or hopefully one day their business valuer, as part of their team. Yeah, right? Yeah. It's decision support. Yeah, yeah. Right? And you judge the value based on the decisions and the outcomes, I guess. Like, if you bring up the business value there, if you're building a business to sell, how do you not involve the valuer in an annual conversation, even if it's with your accountant, to be like, hey, like, how are we going? What levers do I pull? What are the things we should do to keep increasing this value? Very interesting that, and we're seeing a lot more of that, where business valuation is being used as a management tool or a strategic tool to drive those levers. And what does it involve? We used the word before. It involves planning. Yeah. It's that process of, it's delightful to be able to sit in a room with a business owner's accountant, the business owner, and the valuer, and talk strategy about. Okay, we're looking 3 years out, potential succession. Where are we now? What's the market value at it now? What levers have we got to try and pull to skyrocket that? To get to that, And I think people forget often that their businesses are their biggest asset, and it's got the most capability of, like, really creating wealth. Yes. Obviously, we get our houses and all that. That's all happening in the background. It gets a lot of headlines. But if you can turn your multiple from 4 to 6, it's huge, and you grow your profit from $1 million to $2 million, it has life-changing implications to the family. Yeah, and then but then I have to pay the value of $1,000 to come to the meeting. It's like, All right, cool. We just spoke about millions of dollars.
Should be 2,000.
Yeah, well, whatever the number, but you know what I mean.
No, exactly. But I think it's being more sophisticated as a business owner in thinking about how to manage the outcome so that when you get to the outcome stage, you're not terribly disappointed.
And that goes back to the point I was kind of saying before. That's really business owner dependent.
Yes.
So the like again, another client went to Harvard, studied to make his business better, come back, and I just watch him every day from the sidelines going, this guy's actually amazing at how he operates a business. And I guarantee if you sat with him and said, hey, the best way for us to make sure that your exit's going to be as high as possible is we catch up once a year, he'd be like, sign me up, because he completely, as a business owner, understands.
So unpack that a little bit. What's different about him? Has he got different genes? Or, what's the thought process, do you think? Is he very analytical? Or?
No, I think some people, I think there's two ways that, in my opinion, that people look at business. One is, I was a hairdresser and I'm really good at being a hairdresser, so I'm going to open my hairdressing business.
Yeah.
And I think that covers a big portion of the market.
Yes.
The tradies and the accountants and the hairdressers and the lawyers.
I've got technical skills. What I'm going to do.
And I'm going to turn that into a business.
Yes.
That's literally like 90% of small business land.
Yeah.
I like food, I'm going to open a cafe. Like, it's not I didn't wake up and go, hey, here's a problem in the world that I can see, and I think I've got the skills to be able to figure it out and to inspire a team to come and help me solve that problem.
And add some value to some customers along the way and make a business of it.
Yeah, so that there's a lot less people that are like that. And I think those people generally are much better operators than the people that have a skill and then turn that into a business over time.
Is that because they haven't necessarily got the legacy of the trade that's...
The technician,
technician aspects around.
It's really, like, I've struggled with it for a long time when we were building up the firm, is getting out of the detail of the day-to-day is really hard, because even, like I said, I was on the phone talking to the team late last night trying to help them solve problems. It's like, it's hard not to get drawn into something that you're passionate about.
And you know it.
You got
right?
patted on the back for being good at it. Right? Like, you're a really good carpenter. Everyone patted you on the back for it. So there's some ego around it.
Yeah.
So it's really hard to get out of it, versus I bought a business, it sells widgets. One of the best business owners we work with, he went and bought a gym.
Yes.
But he went and bought a Fernwood gym because he knew that. He goes, I can't. It's forcing me to not walk into the business and work in the business. I can only work on it. So he basically put a thing in, and he's actually, by far, of the gyms we work with, he's the best operator. He got tapped on the shoulder to potentially be CEO of another.
Isn't that interesting? So his perspective on the business is different as a result.
Because I can't do a class. I can't run a class.
Yeah. Danny, how old's your business?
Northern Beaches is 11 years this year.
Okay, so if you think about the journey that you've been on in building that business, are there a couple of defining points, and what sort of caused those along the way that sort of said to you, oh, gee, I'm not on the right track here, I need to change, or I've now got confidence that what I'm doing is sustainable longer term?
Yeah, I don't know about defining points, but I'll give you some thoughts, I guess. One, I was very lucky. So Brett Kelly's our CEO. He runs Kelly+Partners as a whole. Kelly+Partners is coming up on 20 years old. Probably one of the, if not the smartest, one of the smartest people I've ever met. Blessed to have always had him as a mentor to be able to bounce things on. Because one of the early things he said to me, and it was 100% true, is the best thing I can do for you is make you sit in the one seat for the next 10 years and just focus. And by personality, I know I would have tried to do 100 different things.
Yeah, right.
And so, his guidance and that perspective really helped me get in and just do the work.
Yes, okay.
Like a couple big insights along the way, the idea of like talent density and finding great people.
Yes.
Getting them on board and how much you can do with a great team versus just headbutting the wall yourself. Like, the second biggest thing after I don't know where my cash is or where my money is that we get from business owners is it's really hard to hire good people and people are shit.
Yes.
And
and you can't trust them.
And you can't trust them.
They won't stay. They'll just go on to the next one.
Yeah, exactly.
Yeah?
So
is that right?
Mate, that's what the world thinks. Often, I flip that often back onto people and say, truth, my experience is that you're just probably a shit leader, and you need to build your leadership skills to be able to find great people and inspire them.
And were you a shit leader? Did you have to build your?
Of course.
Did you have to build yours?
I've freestyled it. I've got some traits which are helpful,
yes,
as in a bit of energy to be able to come and push people along. But I've also got some bad traits that aren't helpful, which I'm like always kind of pushing people 100 miles an hour, which is probably not always ideal.
But the reason you're pushing is what, for business improvement, presumably.
I'm trying to. I view it as in my head is trying to help people reach their potential. So
yes,
and the business reach its potential. So it's always from a place of wanting to get to here. But obviously, I've got certain goals in my life. They aren't necessarily the same as everyone else's goals. So, but I operate in a way where everyone's got my goals. So, a lot of the people that end up hanging around and staying around are the people that are aligned to that. So, kind of works. But in terms of being able to develop skills and that leadership capability, like again, I had Brett there, and I've had other partners at Kelly+Partners to be able to bounce off and learn from. I'm not in my own head. If I was in my own head doing it by myself, I would never have
got to where
we are. And I get it a lot because all the time people will say, like, why didn't you just do Danny Partners and go open your own thing?
Yeah.
And obviously I could have, and it would have been okay, but there's no world I would have learned and built what we've built with the team today, and I definitely wouldn't have had as much fun. So
that's neat, but it's aligning yourself with that expertise, right? Because you've got the so-called big brother in Brett and Kelly+Partners behind you with a lot of expertise.
And it's not always pretty. Like there's plenty of times where, and still to this day, like
of course,
I'll have fights with Brett and arguments about the way I do things versus other officers or what he expects. So it's not always pretty, but it forces me to think and grow differently to what I would if I just did my own thing.
Just for our audience, Kelly+Partners, give us a sense of who they are and how big they are.
Yeah.
And just the arrangements, because you're running your independent business, right?
Correct, yeah.
So just picture that out very briefly.
Yeah. So Kelly+Partners is a listed accounting firm in Australia. I think we're at about 30 business units in Australia.
Yeah.
Mostly accounting offices, couple subsidiary businesses like finance and whatnot.
Yes.
Supplementary businesses. Each business operation is 51% owned by the listed company, and 49% owned by the local operating partners.
Cool.
And then as a group, Brett's moved over to the US. We're expanding over in the US. We've just acquired a firm in Ireland, one in Hong Kong, one in India. So we've got firms around the world now. It's building. It's Australia's first global accounting firm that started from Australia.
That's exciting.
So it's really it's been such a good journey to be a part of. Like we get to do so much and learn so much from just seeing that happen. Even going from like when I started 2014, we listed in 2017. So even just that 3-year journey of seeing where we were in 14, which was really startup phase, to listing and going through that experience on the sidelines. Like I'm not doing the work, Brett is, but seeing it from the sidelines and being a part of it's exciting.
I think it's exciting, and I think at the outset we said, what we're about here is unpacking an accountant's role, but understanding how they can help grow your business as a business owner. So, if you think about the Kelly+Partners journey, your journey within that, and the bigger beast that is Kelly+Partners, like a lot of you have been involved in growing businesses, right?
That's part of what BK said is like kind of like show business a little bit, where it's like,
yes,
come on, jump on, we'll show you how you can do it, if that makes sense.
Yes.
And now it's really coming to fruition where it's like, we'll deal with an e-commerce brand and they're thinking about opening retail stores in the US. It's like, well, this is what we did. And
wow.
you can actually go through the example of how we've done it. Same thing, like I'm thinking about listing, like this is what we did. Which is obviously you could go to Big Four and some firm. It's not like it's out of reach, but we're largely suburban accountants.
Yes.
So our competitors are not even close to. Our local competitors aren't close to doing what we're doing.
And if you think about your clients, demographically, what do they look like? And name 3 pain points that you regularly come across.
Right? like, so I'll kind of repeat the same thing around the type of client.
Yeah.
Generally, industry, etc., doesn't matter. It's really,
Yeah.
you know, generally the people that work best with us and have the best experiences are business owners that are trying to do something in the world and like want to be business owners.
Yeah.
We obviously work with a lot of people that aren't like that, but that's very much like, here, do my taxes.
Yeah.
The ones that we do the most with is like, hey, help me open stores in the US. Like,
Yeah.
we're having monthly convos with them. My specific office, age-wise, are generally like 30s and 40s, mostly because they've grown up with me.
Yes.
From when we started. Across the Kelly+Partners group, you know, we're doing
more diverse.
Yeah, there's 25,000 different business groups.
Yeah.
In there, so they're everything from
That's amazing.
baby to, you know, retiring. So, yeah, we can look after basically everything. In terms of biggest pain points, that, you know, touched on them, but first one's probably cash. Like, often
so it's cash flow, is it?
cash flow. Like where's my cash gone?
Yeah, and give us an example of how you help with that and what you see. You know, there's some key insights or issues that our audience needs to kind of know about.
That's the issue that most business owners have. Again, is like, they're not trained in business.
Yes.
So they don't understand the cash flow. They don't want to understand. Not they don't want to. They don't, like, it's scary for them. It gives them anxiety to start to think about the numbers. They just want to sell the widget or be the hairdresser, or most business owners don't want to actually be an accountant or understand the P&L. So the first challenge is helping build the confidence. Like, I say it this way. I say, you can't move to France and not learn how to speak French.
Yeah.
You can't decide you're going to own a business and not learn how the numbers work. Like,
Yes.
you've got an obligation as a business owner to learn the language of business, which is P&Ls, balance sheets, and debits and credits.
Yes.
You have to some degree, understand it.
Yeah.
I don't need you to speak it fluently, but if I send you an email, you need to at least be able to understand what we're saying, and we can debate it from there.
But Danny, you've got a profit and loss statement, you've got a cash flow statement or a cash statement, and then you've got a balance sheet.
Yep.
Which of them is more important as a business owner? I'm not used to this accounting stuff. I'm just a simple business owner. I make money. My business is highly profitable. Do I need to actually understand each of those and how they interrelate? And why?
Yeah. So I'm controversially going to say, like, I don't expect them to. So should you? Of course, but I'm not silly enough to expect them to get to that level.
Yeah, I get it.
Cash is the most important in terms of what's the most important thing. If the cash flow is not working, it doesn't matter what any of the reports say. The cash flow is the most important one, kind of thing.
Yeah.
But I think that's where our job is to, you know, really simplify it for them to what they should focus on.
Yes.
And if the model or the, you know, what I get them to focus on the P&L,
yes.
If I think it's broken in the balance sheet and the cash flow, that's my job, is to interpret that for them to feed it back.
So for cash flow, if we drill down, where do the problems arise? Are they timing issues around receipts and payments, or are they kind of margin issues around, you know, not getting enough for the service, or what? Where do those problems?
So the number one thing I'll talk about all the time is gross profit margin. In terms of most people can't tell you. So I say, what's your margin? They'll be like, not sure. Or they'll give me a number, and then I'll say, that's awesome. And then we'll run the actuals, and it's nowhere near
I get the same thing as a valuer. It's interesting.
It's crazy. And it's like, well, how are you making a single pricing decision if you don't know the margin you're making? And they'll know, like, we got a big e-commerce team, and they'll know the price that they got quoted to buy the product for in China.
Yes.
So, like, I buy the jumpers for $20, I sell them for $80, so you know, I make $60. Like, awesome. Like, did you take the exchange rate into account, the shipping, the freight, the shipping to the customer, the merchant fee? Like, and so they're $60 they think they're making quickly becomes $30, and that changes everything within. Well, the biggest thing it changes is how much they think they can spend on marketing, if they're even tracking that. but the first thing we'll do is get a really clear understanding of their P&L, their margins, etc., and start to make sure, like, they understand gross margin. Like, that's where we'll go to. Is like, do you understand your margin? Let's understand the margin. Yeah. Then we'll start to break down, like, marketing spend and things like that. Like, what are we spending in different channels, so that they can understand business. If it's a gym, it'll be like, what are you spending on your people, or what's your rent cost?
Yes.
Or like, every business is going to have a couple different focus areas
of course.
on the P&L. Yeah. We just help identify what they are. And then the financial control piece I said before, build the reporting that allows them to identify it quickly, and then do some reps on getting them to read that.
Yeah, and I see where the relevance of that financial control piece comes in, because we're not talking about accounts in arrears here, really, like going back.
We're talking about
today,
live.
What's going on.
Yeah.
You know. Yeah. So that's the cash flow side of it.
Yep.
But you also mentioned the balance sheet. What as a business owner, what do I need to know about the balance sheet? Why is it important? It seems to be this thing that just happens in the background that I see in the reports, you know?
Yeah.
Like, is there something there that, you know, does it represent my wealth or otherwise? Or?
So the way I've kind of tried to break it down to simplify it for, someone like Greg, would be, if you think about the P&L as your scoreboard. So we're playing a game of footy, have a footy game. I win the game. It's $10,000. I won $10,000. I play my second game. I win $10,000. I've got two $10,000 wins. My balance sheet's more like my competition ladder.
Yes.
What's the accumulation of my wins and losses of my games that I play? So one game won 10,000, one game 10,000. My balance sheet would show $20,000.
Yeah, right.
Does that make sense?
Yeah.
So if I give it a sports analogy, it's that. It's like play a game, competition ladder. What's more important, that you win the game or you win the competition?
And what is more important?
Yeah, well, ideally we're winning a lot of games, so we're building a lot of wealth on our balance sheet.
Yeah.
Ideally, that's essentially the flow, is like how much of our profits flowing in to sit in our balance sheet, and where's that cash gone to? We're in the game of making money. So as we make money, where does the actual dollars flow? That's essentially what the balance sheet's telling us.
I love that analogy. And I know many business owners that are, quite experienced and sort of millions and millions of dollars of turnover and good profits. But to explain those statements
takes a lot,
and be very clear about how they're impacting their business. It's just not something they're focused on.
Yeah.
But I bet that Harvard graduate that you're talking about knows his stuff in that respect.
Yeah. I could put him in my team to do the accounting today.
Yeah.
We had a meeting with him yesterday. It's funny, and I said this to him. We're talking through Division 7A, which is a tax concept that's relatively complicated in terms of tax and hard for people to get their head around.
But it's important.
It's important. We're explaining that concept, and he asked 57 questions to the point where I'm like, mate, you could come and work for me at this point. Like,
you know too much.
You know how but the point is, like, that's his. We're talking about an item on a balance sheet. He wants to increase that, like, know it to its nth degree, to be able to understand it, explain it, whatever. Like, he just kept asking until he fully understood the concept.
Yeah.
And that's that type of business owner that we're talking about. It's like, he didn't just say, whatever, you'll solve it in tax time. It's your problem. Just kept asking until he understood it.
Curiosity,
Curiosity, yeah.
Yeah. I want to leave cash flow, but before we do you get many business owners that are growing sales rapidly, but they've got no cash?
All the time, yeah. And you'd probably seen this or heard this as well, where they're like, the P&L says it's 300 grand. They're like, where's my money?
Yeah.
That's their inability to read the balance sheet. They don't actually look. Okay. And it's normally like there's basically 5 buckets, really. I'm going off the top of my head. I have this in a slide somewhere. There's 5 buckets. Like, one is it's obviously in the bank account.
Yes.
which we'd see it.
Yeah.
2 is it's in working capital, so like tied up in inventory or accounts receivable,
creditors.
The movement of those.
Yeah.
But that's like largely, hey, I've made $1 million of sales, but my customer hasn't paid me. It's tied up in your customer's bank account.
Yes.
Or I've gone and spent it to buy more inventory to grow the business.
To feed that beast in terms of sales.
Yep. Yeah. Third one is like fixed assets, like I've gone and bought a car or equipment or something with it.
So it's locked away.
Locked away in an asset. Fourth one is loans. So I gone and made a bunch of debt repayments. So I bought my business with a bank loan, and I've had to pay 20 grand a month. So my cash has now gone into paying off that loan.
Yeah.
So I'm making profit, but I've got to pay back the debt.
Yeah.
And the fifth one that is the most common after probably working capital is director's loan accounts.
What
so I made 300 grand and I've just spent it on school fees, holidays, handbags, and taking the family out to dinner.
Yeah.
And they don't connect those two things.
So those five, that's the diagnostic, right?
Yeah.
About poor cash flow.
Yeah.
Or issues with cash flow.
Yeah. And like obviously in our job, we can look at a balance sheet and it's really quick to identify that. But if you chuck that to the business owner, they're not going to ever think about it or look at it that way.
Yeah, but look, I see it as so important. And we talked about the building industry, right? I was familiar with a firm. It wasn't a very old firm, but they were in commercial industrial building. And they went from a $300,000 turnover in their first year of existence to, over the next 2 years, something like near 5 mil. And then they went into administration.
Yeah.
And, my sense is if they diagnosed those 5 areas, they might be still with us today.
Yeah.
Right. And we see countless firms go through that. And it's sad in a way because I think, there's some great business development people that have sold their offerings to the market, right? Yeah. So they've done a good job at doing that. Now, one could argue they've sold them at too lower margins, if any margin, but that's a positive. The other positive is they've brought along a bunch of clients and said, listen, we're going to fix your building for you. Well, at the end of the day, they didn't fix many buildings, and it ended in custard.
Yeah.
But a lot of energy for not much outcome.
Yeah.
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 And there's a mantra around scaling your business, no matter what industry you're in. But I guess, I'm very keen to tell clients that, look, unless you can scale for profit and do it in a measured way, why would you bother? Yeah.
I think obviously the tech space of the last 20 years or whatever has kind of merged that conversation into traditional business. Yes. And they're two different things.
Yes.
In tech land, where you're raising capital from investors to fund the expansion, you're not funding, it's not the business operation that's funding that extreme growth.
No.
And your end result isn't to try and chase profit. Your end result's to sell it to someone else to integrate it into their business and make profit in the future.
Yeah.
It's a very strategic and completely different business, but all the media hype that, a once in a billion year Facebook or Uber or whatever gets dilutes what the local hairdresser or whoever thinks they should be doing as well.
Yeah.
If I just grow revenue, everything will be okay.
Yeah.
Again, another great lesson from Brett when we started was like, I would always push really hard to overhire people to fund our growth rate.
Okay.
Like, I need to hire more people. It's too stressful. Danny, if I let you get out of margins, you're just going to get fat and you'll stay fat. And
isn't that interesting?
So he always, he was very disciplined with, these are our benchmarks. We've got to stay within benchmark. And we've always ran a very disciplined business to benchmark because he was of the view that it's really easy to get fat and really hard to get skinny.
That's very interesting.
Yeah.
And I guess the personal fitness journey would be the same, right?
That was there.
Well, that's fascinating. And so he certainly has in mind some key benchmarks your business does.
And if you go back to what you were saying before about great business owners and things they do, one of them is discipline. Discipline to how they manage their cash, discipline to the benchmarks they run to, discipline to their daily and weekly routines. If you took the same discipline that an athlete has to building their career, to a business, or someone who's going to the gym trying to lose weight or build muscle to their business, the daily training and the daily eating and the reps that they have to do, you'd find they're a lot more successful. People don't necessarily apply the same discipline to their routines in business.
Look, I think that's a very cogent point. I think there's a tendency for all of us to look for silver bullets, quick fixes to things or hacks to make things better.
Don't exist.
No, and I find in business it's a bit like your network. You can be building away and meeting people and making connections, and you can do it for 10 or 20 years. And you wonder, well, how valuable is my network, blah, blah, blah. And then suddenly it becomes like a big snowball and it runs down the hill and hits you in the head because it suddenly delivers. I think, time in the market is such an important thing.
Yeah.
And we're all a bit, we can be a bit impatient. Yeah.
There's another great Brett Kelly recommendation. Jim Collins is an amazing author. Has written a book called Good to Great.
Yeah.
Has two concepts in it that you essentially just touched on. One's the flywheel effect, which is, those having the right things you're doing, like building networks, etc., and doing that for a long time, that flywheel starts to spin, and you do start to get a snowball effect. The other one is, the shiny object syndrome was going to be my problem number 3.
Yes.
But shiny object syndrome is a real thing where business owners jump from thing to thing looking for a silver bullet. And in today's world, technology to technology, or app to app, or AI to AI. Jim Collins has a concept in Good to Great where technology should be an amplifier.
Yes.
It's not the solution.
Yeah.
So you need to get disciplined, people following disciplined process, etc. Disciplined thinking, and then technology is used to make that better. It's not at the front of the cycle where it's like, hey, we're going to use technology. It's going to make everything great.
I love that, and that's your number 3 pain point. We'll come to number 2 in a minute. But that's really interesting, right? And the technology example's a fascinating one, because I know a bunch of business clients that they've grown rapidly, they've got legacy systems, and they're looking at ERPs and AI and all sorts of things to fix it.
Yeah.
And they go to market and they buy some expensive solution, and I've been involved in some of those procurement processes, and I remember one where the cost of the solution, it was probably 10 years ago, so it was before the whole AI piece, but the cost was like 2.5 million.
Crazy, eh?
Right? And we put it in, and the business, it was like being constipated for 3 years following. Right, it just
everything.
It just dragged the business down, and the reason was because there was no discipline, procedures, business processes within the people that was developed.
Doesn't matter what technology you give them.
So I think very apt example there. Time over again. Yeah. There's no way you'd go near a tech solution.
Fix that stuff, and then we'll talk about tech.
Absolutely.
A bit I can't say this enough, but like another Brett lesson for me where back in the day I would have been like, we need this app, we need this. He's like, shut up and do this, and we'll talk about the technology later.
Well, you did say that one of the things he helped you with is that you were sort of guy that,
jumped from everything.
Jumped from everything, right?
Yeah.
So he slapped you about the head and said, "No, you just focused out here."
I see it with clients today. Few examples, but they're in hands in a million pots.
Yes.
And the guys in the office actually get frustrated working with them because it's just difficult to get them to focus and do what we need to get done.
Yeah.
And I have a lot of empathy. I say it to the guys in the office all the time, like, listen, if it wasn't for the system I landed in, I would have been exactly like that. So, it's not their fault. Give them some space.
It's interesting because obviously they have curiosity and they look at opportunities and they're entrepreneurial.
Yeah.
Right.
And they might hit a home run. I'm not bagging them.
No. But there's a downside to what their behaviour is as well.
Correct.
Do you find that you're often in a situation where you kind of have to tell someone that their breath stinks a little bit?
It's hard.
How does that work?
Yeah, it's hard. We try and be delicate as often as we can. Try and be supportive as much as we can. There are plenty of times where we have to have tough convos.
Yes.
What we've probably done really good within our team is build trust.
Yes.
I think if you build a lot of trust with people and we genuinely care and we genuinely want the best for our clients, where we ride their journeys with them, when we have those hard convos or we're having those debates, it's never coming from a place of anything but love. So
yeah. So they respect
it. Yeah. And we definitely lean in really into the relationship. So the team care a lot about who we work with. So
I think that's important, because business owner, it can be a lonely place, right?
Yeah.
There's not too many people that are, able to give a transparent, independent view about how things are going, so to speak.
Yeah.
So I think, that is an important thing.
You said that before about the relationship people have with their accountants, and it's like love hate, and they feel like they hide them in some esteem. I think it's partly that. It's like there's not many people you kind of stand naked in front of and say, look at me.
Here I am.
And that's the relationship you almost have with the accountant. They're one of the only people that actually know the reality of your situation financially.
Yeah, every time you go visit, the tide goes out and you've got nothing on.
Yeah, you don't think, exactly. Warren Buffett, thank you. But again, I was speaking to a gym owner on the way here, and I was explaining this exact point, saying with fitness industry or whatnot, you can tell if someone's bullshitting you or not. Like, did you train or you didn't train? I can see the results of what you're doing.
Yeah.
With the business owners get, as most of the world does, caught up in this keeping up with the Kardashians land of, but this other business owner's buying this car or doing this, and you're competing against people mentally at the very least on what they're doing and think you need to be doing the same, but you don't actually know the reality of their situation.
Yeah.
And I can hand on heart, like, we see this every day. Online influencer, business owner that the world is watching kill it, and they're in our room talking about how we're going to liquidate the company or restructure or have to get out of all the debt they're in because they've ripped all the money out of the business and it doesn't work. Like, it's such a fugazi of this social, and it's true in all parts of life at the moment. But
well, it is, but I guess you're kind of alluding to the fact that keep an eye on your competitors and what they're up to, but if you want to judge yourself, maybe the competitors aren't the best way of doing
I genuinely don't think they are. Often they're going broke.
Yeah.
If you build some good, again, rhythms, discipline, benchmarks, like you're your own competitor, and just have that focus. But it is a lonely place, to your point. Like, they don't have many people. There are a lot better business communities are now than they used to be.
Yes.
But often they're fake still.
Yeah.
So you sit around the table, everyone's patting each other on the back, and no one actually is willing to open up in most scenarios.
Yes.
So you really have to build that trust and get in a circle of people that can be honest and help you solve the problems.
I love that. You're an accountant. You're supposed to be good at numbers, and you went from 1 to 3. How did that happen?
I don't know, mate.
What was that?
We skipped.
What was that second? What was that second?
You went to 3. I just had to jump on it. My second one we touched on already to a degree, but it's people. It's people. They're the 3 biggest things. It's like cash, people, shiny object syndrome.
So how can I can figure out how an accountant can help with cash and also shiny objects, both funding them but also, considering them, I guess.
Yeah.
But how can you help? How can you help with the people?
I'm not sure every accountant can.
No.
To like truthfully, in terms, it depends how you think about it.
Yeah.
They can help you make people hiring decisions and firing decisions if you want to talk about the numbers around it. And when I should and when I shouldn't.
Yeah.
If I, like, from my perspective, how I look at it, we're a people business. I spend my whole day thinking about how do I build a championship team within my office?
Yeah.
How do I help my team reach their potential? How do we hire the best people? How do we manage the best people? Like, that's my whole life. I'm not sure if every accountant thinks about it the same way.
Yeah.
But because that's where our energy is, often when people come to me and we start talking about people, we can have some good convos around it.
Yeah.
But yeah, if I kind of bring it back and break it down, it's like another Brett lesson. But where's your 17 to 19 step recruitment process for how you attract and engage with the best talent in the market? What's your value proposition to find those people? Why would they want to work with you if you're a lazy old accountant that's not trying to grow themselves? Like,
so there's quite a science to Brett's view about pulling people on board, right?
I think the point is, if it's the most important thing in your business, surely it needs some attention.
Yeah.
And like if we're recruiting I'll tell you some stories actually. If we're recruiting in our office, we have 3-4 tests essentially. So we'll do an interview, normal like get to know you interview. Included in that interview, we'll have like we throw in a secret question that a task for them to do when they get home. If they don't do the task, we eliminate them from but it's kind of subtle. It's just send us an email on that when you get back home. Because one of our biggest things that hurt in our business is people not doing what they say.
Yes.
So if you tell me you're going to send me the email, you don't send me the email, you're probably not going to work with us.
No.
Then we'll do a technical test, like what do you know technically? Then we'll do a practical test, like how do you use Xero?
Okay.
Can you communicate in an email? We kind of run them through a process. Then we do a personality test as well to make sure they aren't serial killers, anything like that. We'll do reference checks. So there's a process that's pretty big to get people through the door. It means we interview a lot of people and don't hire many people, which is hard. Even with all the steps that we do, there's another 10 steps that happen in the background. Even with all the stuff we do, we still get it wrong 50% of the time, which tells you that it's really hard to find great people. Yeah. And then in terms of like recruitment full stop, like one of the other issues is like lead flow of people.
Yes.
So it's like, it's all well and good having a good process, but if I can't get them to apply, the process is irrelevant. We this week or last week actually, last Tuesday we went to I don't know if you know on the Northern Beaches, but they're famous for these massive bus lines that go for like 200 meters.
I know the yellow bus.
But they're trying to get to the city, and we have this frustration where I'm like, we have the best accounting offer in the beaches in terms of like career opportunity, day-to-day work, dealing with clients. Like we have the best offer. I should have a line of people at the front of the door kind of trying to come work here. Instead, they're sitting on the bus and lining up for a bus for an hour and sitting on the bus for an hour to go to the city to work in a job. And so I'm like, what are we going to do about this? So we went last Tuesday. We set up a free coffee for accountants stand. So we built a Kelly+Partners branded coffee stand. We sat it at the bus stop.
Oh, that's classic.
We made coffee cups that said this could be your last commute with like a QR code.
Really?
To go to the job at.
So how did it go?
It went so good. So we had heaps of good engagement on the day.
So who thought of this? Did you? Who?
We did it in the office. We just.
That's great.
It started from an argument about can we do more. So it worked.
But do you know what? People and culture is more and more part of our business assessment when we do a valuation.
Interesting.
Right?
Wow.
And we never used to do that, right? Like back 5 years ago, we'd look at the financial assessment and we'd focus on the numbers and the numbers and the numbers.
Yeah.
But I know from the businesses we've dealt with that the ones that are supremely successful have got their people placed right.
Yeah, see, I never would have thought that you do that. That's
and we look closely at it, right? So, and I'll ask you this question, not because I'm valuing your business, but it's one that we do ask. And, if I was talking to your team, what are the three words they would cite as representing the type of culture that your team has, do you think?
Yeah. I think they'd say like loving and caring, like they genuinely love each other. My team, every second weekend, if not every weekend, they spend the weekends together. Like they we are kind of like a friendship group as much as we're a workplace. I'd say hardworking would be the next one.
Yes.
Like as far as I'm concerned, they work harder than just about any accounting firm or any team in an accounting space. And accountants work hard.
Anyhow.
By nature anyhow. And I'd probably say want the best for others, which is one of our values. Like they genuinely, like you can hear it when you talk with them and deal with them. They care about the outcome of the people they work with. So it's
I mean that last one. I mean they're all important, right? But that last one, as a business value, we look at sustainability of earnings, right?
Yeah. And
if there is that care factor, and a care factor within the business, but also for the clients, that's a key contributor, in my view, to sustainability of earnings, because it means people go out of their way. It's not just a transactional situation. You know what I mean?
For the most part, I actually think the accounting industry has that a lot. In that, personally, I look at it like nurses and teachers.
Yes.
Most people don't go in accounting for a payday. Like it's as a in chartered accounting, the money, especially in the first 10 years of your career, is really bad. And you're working really, really hard. So I think there's, you're going into something like chartered accounting because you genuinely care about, the people or the business owners or something, or you're staying there for that at least. Maybe you go there. Maybe you go there thinking you're going for the numbers, but the people that stay, you generally find they're really caring and empathetic kind of people.
Yes.
So I think it's true in a lot of accounting firms. I'm not saying everywhere and everyone, but I think a lot of accountants really do give a shit about the clients that they work with.
Yeah, no, that's neat. I got one last question.
Yeah.
At the top, we talked about accountants helping growing businesses.
Yeah.
If you reflect on your business, look forward 5 years from now, and think about it from a business owner's perspective. How will it be different? Will it be the same?
Yeah.
What are the opportunities and risks around that journey, do you think, for accounting?
It's hard to say. Like obviously with what's happening in AI tech space, there's a lot of talk of it changing dramatically. I see us doing less transactional work, more advisory work, like a lot more time with client, a lot more time in meetings, a lot more time in decision making.
Yes.
I think with more information, it creates more uncertainty. So if you think about, I keep using fitness as an example because it's easy.
No, that's fine.
It's
good.
That you've got to eat less and move more.
Yeah.
Yeah. But you still pay gym memberships, personal trainers, things like that to help motivate you, stay accountable, guide you, etc.
Yes.
I don't see that changing in the world. I think people will value human connection and touch more than they won't. There's definitely going to be a whole bunch of automation that will happen.
Yes.
I just feel like it's a generation away from actually being, used. Like I still can't get people to use Xero half the time. So
it's there's still a fair bit of lead time before.
I believe so. I mean, again, I could be completely wrong. It's not like it's my place of expertise, but
yeah.
Like I was saying, I can't get someone to log in and upload a receipt or do like the idea that I'm going to get them to trust data. And I think people have a big mistrust for the government, even probably more so now than ever. And so I think the more the government automates, the more they'll push back because they feel like they're controlling more and more.
Which is going to place emphasis on accountants to help in that process.
Help navigate it,
yeah. Because the compliance piece is going to be, it is important, but it's going to be ongoing, a major part of business, yeah.
Yeah, correct. So that that's not going away. The compliance and the legislation keeps growing. So that side of it, I think, will always be there. And I think the obviously a lot of it will get automated, but that won't take the role away of someone having to interpret. Instead of needing a team of 50 that we have at the moment, maybe we have a team of 30. I don't know what that looks like.
Yeah. But
I don't see the business not having a very important part to play in people's lives.
I said that was the last question, but a lead up, supplementary to that. You're a business owner, don't know what industry. You've got a few $1 million turnover, maybe up to 5. Your business is growing quite well. It's profitable, but it's stretching at the seams, and you need some advice. You're looking at your accountant. He or she's a tax accountant largely. You can see in the next 2 to 3 years your business is going to be 10 mil, 20 mil turnover business. You're in your 30s, 40s, early 50s. What are a couple of things that you look for from accounting services?
Yep.
If you've opened your mind and said, gee, I need to consider whether I'm getting the right advice here.
Yeah. You're obviously looking for expertise in terms of someone that can, if you feel like you can trust, that's giving you the right answer, but probably go a step further and say you're looking for someone that's actually running a business or running their business like a business.
Yes.
Like walked in your shoes before.
Yes.
I think it's really hard to have any empathy and appreciate the job of the business owner without being in the shoes of a business owner.
Yes. Yeah.
So like on the tax side and the technical side, I think it's expertise. On the finance, like CFO side, it's like some level of being in it before and actually either at a business had a CFO role or run multiple businesses yourself, and you're someone I would aspire to be like.
Yeah.
Because again, another lesson. Once BK gave me, I done something, a deal thing, and BK got me a Rolex for something, which was very nice and very appreciative. And I always felt really funny wearing it because I just didn't feel like I earned it, didn't deserve it, and I hate being showy. So I was like, I can't wear this anyway. And I made that comment to someone once, and they said to me back, they're like, I'd much prefer my accountant be able to afford to wear a Rolex than not. And I was like, it's actually a good point.
Well, it is a good point, isn't it? Right? Because it shows that they've worked hard and got success.
They can achieve something, yeah.
Yeah. And you're saying if you're going to be in the trenches as a business owner, you want to know that the people that are advising you at one point in time, they've been in those trenches.
Yeah.
It mightn't be exact same, but they've felt the positives, but they've felt the negatives, and they've had to map through it, right? Because I guess in seeking advice, ideally you're wanting advice from someone that's been there before.
Yeah.
So they've got that perspective.
Yeah. Like I read a lot of books. We can read as many books as we want, but without doing it, reading a book about how to do push-ups doesn't really make you better at push-ups. So it's the same concept. Like you need someone that actually has done, and obviously plenty of accountants are partners in accounting firms, but they don't operate as business owners. They operate as partners in accounting firms. So you're looking for someone that operates as a business owner. That's
an interesting and distinct difference, right? And I think, many business owners won't understand that subtlety, but it's an important one. Yeah?
I think so. And or like it could be just they're been in a CFO role in a corporate business, but they've actually had to go through the process of making real financial decisions that actually impact something.
Yeah,
it's really easy to sit behind a spreadsheet and say do X, but you've got no risk and no, you're not the one staying up at night thinking about it all night. So.
And managing the cash flow, pulling the levers, making sure we can pay the staff next week or whatever it is. Yeah. Hopefully, it won't get to that point.
There's probably a point to that in the role that we play as well, like the counsellor kind of thing almost. Yeah. Where and again, it's coming from a place that we've been in the situations before, but on the call the other day, it was like, client rings talking about problem A, but you have to be able to identify that they're actually talking about the feeling they have about lack of cash flow or something else that's completely irrelevant to problem A over here, and learning that skill of how do you
teasing that out.
How do you tease that out and get to the point, hey, this is just a psychological issue. It's not a real issue, but let's talk about it.
But you have to be perceptive, right? And
it's another job that you have to have.
So you on the one side, you sort of got to show empathy, but on the other side, it's almost like a subtle detective. To get to the bottom of things. Yeah. Hey, Danny. Thank you very much for joining us
Anytime,
on Let's Talk Business. I really appreciate it. And
grateful.
I think understanding the role of accountants in helping business owners grow their business, we've unwrapped a lot of interesting insights there, and ones for our audience to think about. So appreciate your time.
No, love it. Thank you, mate.
Cheers. Done.
Happy. Is it all right?
Yeah, look at that. Tracking? 3 minutes to go.
Oh, look.